Hello everyone, welcome back. This is Forex Chronicles. So I want to share you this what my experience with moving average. So I normally use crosses like 13 and 50, 50 and 200. So the one in front of you is called ID50. The coming on are safety trades. So my experience using this moving average, I've come to discover that when you see a cross of 13 and 50 has the following features. The first is here shows the real order block, real trend, entry level, take profit, also valid gaps. Why have I marked valid gaps and order blocks? Because there are so many order blocks that are not valid and gaps which are not valid. So using 13 moving average and 50, it shows me which one is the real one, which is not the real one. So I take trades when these order blocks have been crossed by the 13 moving average around the body, not the wick, but around the body. So here is the map that should be in your mind when studying market maker cycle, or we call it BTMM, beat the market maker cycle. So there are so many stuff to discuss. Here there are the rules. As you can see, there are the levels there. Each level has their setups. You can see the safety trade ID50 that I normally trade. Level 2 has M&W structure. ID50 level 3 has multi-day M&W structure, head and shoulder, half Batman setup, inverse, and there are entries that I normally use, shift candle, morning star. They are very simple, but all these entries and setups or level will be clear when you've seen 3 moves. So it's simple, like if you're using BTMM, you have to see 3 levels. If you are using Eloy 12, you have to see 3 impulse and wait for correction or for the next impulse again. If you're using quarters, or it's called number theories, you have to see 200 pips in 3 days. So it's easy. So all those setups, all those theories are in a context of three levels, 3 moves, 3 movement. So another one is peak formation. Peak formation are normally W or M. So W, they are down for level 1 for uptrend, and M structure for downtrend. There are so many W's in the market. There are so M structure or W structure in the market. There are so many. And another one is London pattern. As you can see, the London pattern are there. London pattern are according to Asian box. So the blue mark is an Asian box. So at 50 Asian box, at 100, and at 0. Those are the levels. So here is the market maker cycle. I've simplified for you the moving average and the levels. So when you see H1 levels, 3 levels, when you go to M15, those are 9 pushes. H4 levels, 3 levels in H4, those are 3 weeks level. Yeah. And day 1, when you in higher time frame, like daily time frame, then you see 3 levels, those are monthly cycle. Coming to the moving average, there is 13, which represents 15 minutes, or it normally shows the order blocks and the gaps. Then there is 50 moving average, shows daily time frame. 200 represent H4, 800 represent daily time frame. Sometimes shows the peak or stop hands, where the market or the big institution gonna take the stop hands, where they've settled their money and they'll come and take later. So it's very easy and very common. And 5 moving average filters the noise in the market, Here is another one. Here's what you need to beat the market maker or the moves. You have to see the 3 clear levels. So level 1 is 13 and 50, level 2 250, level 3 it is 200 and 800. Using days, you have to count from day 1 to day 2. So sometimes day 1 can be in level 1, day 2 in level 2, and day 3 may take 3 to 4 days to finish that level. So I've not for you there down. 4 and 5 might be an extension of our level, but you have to see 3 levels in 3 days or 3 to 5 days. So here's an example of a clean, how to draw levels using a clean chart, no indicators, just me observing, and since I know how to count the levels using moving average, using days, and so it's easy for me. When I see it's hard to see the levels, I just put moving average and I see clear structures. So that's a clean one. Another one here is this for indices. As you can see, I have not for you there. Indices is provided by the binary broker. So you can see the level 1 there is 13 and 50, level 2 50 and 200, level 3 EMAs have expand or have fanned out. As you can see, there's a third moving average there above the purple one, as you can see it. So moving average are so nice when you're using them in indices. If it's a cross, shows a long term, it's a long term. If it's a short term, it's a short term, a heavy one. Another level is here, H4 level. This is pound Swiss. There it is. There are 3 levels, but the 3 levels are being completed in 5 days. Another one, this is for beginners. You can just find consolidation and the move, consolidation and the move, consolidation and the move. Consolidation shows the levels easily. So this is for beginner. Another one is this one, very simple. Another one is here. This is just a clean. When you have this picture in mind, you know where the price is going, so you won't be afraid of news or what, because the market is going somewhere else. These guys knows, those guys, big institution knows where to take the price, so they know exactly. So another one is a feature of 800 moving average. This is a very important moving average because it shows the extension of a trend. It shows the volume, the hidden stop hunt, also peak formation. So most of the stop hunts, or most of consolidation, or most of choppy markets, you can identify them by using 800 moving average, because here's where the brokers, or you can say those big institute, take their money and start manipulating to those retail traders around this moving average. Another is on our criteria of taking our entries. We have to see a break of structure, an order block that has been crossed by a moving average on the body by the 13 moving average. Another one is a trend, and then you are done. So if it's an uptrend, you know where to buy. If it's a downtrend, you know where to buy. Another one is a moving average. It is 200. It's a very important one. It shows the trend reset and in-person correction, acts as a strong and support resistance, show long-term trend, shows clear M and W structure, and also after 3 levels where the market is going to do a peak reset or a trend. It's very common. This is a very strong support, or a very strong support and resistance where the market is uptrend or downtrend. Another one is 50. This is very common because it represents the 1 hour time frame. It's the best for the people who are using support and resistance when their support becomes resistance, or their resistance becomes support. So when you're using zone flips, support tuning to resistance, or resistance tuning to support, you can use this 15 moving average. The last, so here is another type. So this is very common. It's the most one I normally use, 13 and 50. You can check on my videos if you want to understand more about 13 and 50. This is called ID50. Just have to wait for 13 and 50, and then retracement to the higher moving average, that is 50. Co-influence a candlestick that have been crossed by the 13 M and structure, and this type of setup should be in level 1. This is why you can get snipers, mostly sniper level 1. 50 is called safety trade because it's in level 2. Broker doesn't go in level 1 again after level 2 at start, because it's going to allow those traders who have been late for the level 1 will join, because they'll see the market dropping and suddenly the market start moving up. So broker doesn't allow such thing. So whenever you see level 2, so when you have missed level 1, just wait for the level 2, because level 2 is where the broker will show you many setups, because this is a London type of trades. So here's an example of type of moving average. We have exponential moving average and simple moving average. I normally use exponential to determine fake outs, and I use simple is to determine the recent candlesticks, because the exponential lags a little bit, but simple shows me the recent candlesticks that have potential for me to take my trades. But in other way, exponential shows me the fake out of trade. So another one here is, it's the same stuff, so you can just see, just as a reminder, level 1, level 2, level 3, the days. So here's an example. So this is a trade I've been taking on V75 for the past week. Here you can see, it's very common. It's very common, as you can see. Sorry for the interruption, guys. It's very common. So that's another one is here, you can see it, and the last one is there, 50 and 200, and then wait for the bounce. That's all, guys. Don't quit. Use the same setup 100 times and you record your moves. You will be perfect, guys. You will be perfect. It's amazing. You can subscribe, you can comment, you can leave the comment, share, like, so we can spread this stuff. And it's not for sale, it's for sharing with you guys. Don't caught by other people who sell this. This is for free. Thank you.